Today, we're diving into the latest updates on SoFi, breaking down current data points, recent developments from the company, and everything else you need to know.
Hello, everyone.
Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. Recently, SoFi's stock dipped by 14%, hitting a new 52-week low at $6.26. This decline isn't directly linked to any specific news about SoFi, but more to broader market dynamics, particularly due to the S&P 500 facing strong resistance at the 5,500 mark. This situation has led to increased volatility and market-wide apprehension. In terms of trading volume, SoFi saw 19.4 million shares traded compared to its average of 34.6 million. Notable transactions included a significant buy of 274 million shares. However, this activity was before the market became more fearful. Additionally, initial jobless claims came in at 238,000, slightly above the forecast of 235,000, contributing to market uncertainty. Interestingly, negative economic data can sometimes be seen positively by the market as it might prompt interest rate cuts. Despite the lack of specific news from SoFi, there was a noteworthy insider transaction. Officer Jeremy Rochelle sold around 56,000 shares, equivalent to $360,000. This isn't necessarily a cause for concern or celebration, but it does raise questions, especially considering Jeremy's history of selling shares at market peaks. This pattern can be seen in past transactions where he sold significant amounts for tax purposes, such as a $974,000 sale, representing about 23% of his position at the time. Jeremy's actions might be seen as harmful to SoFi's image. On the short-selling front, short positions in SoFi increased by 148,000 shares, with 17.53% of the free float being shorted, totaling 182.1 million shares. The cost to borrow average stands at 101%, and utilization is at 73.13%. Given the broader market fear, a larger increase in short positions might have been expected, suggesting the sell-off that drove SoFi to its new low was somewhat unjustified. In terms of options, there's $461 million in call options and $173 million in put options, with a 52% bullish sentiment. However, this could be skewed by short sellers hedging their bets.
Currently, open interest at the $6 strike price is 6,000 contracts.
21,000 at $6.50 and 59,000 at $7. This indicates significant resistance, particularly around the $6.50 mark, which SoFi might struggle to overcome without substantial momentum from institutional investors. Looking ahead to next week, there are already 9,000 open contracts at the $6.50 strike price and 16,000 at $7. SoFi's current trading price of $6.34 places it between support levels S3 and S2, suggesting the market views it unfavorably. Stocks trading in this range often face underlying issues. Despite SoFi's strong earnings and growth, it lacks substantial institutional support, which is crucial for sustained upward movement. There are several bearish arguments against SoFi, particularly related to its loan business, but these seem minor in the grand scheme of things. For now, SoFi is stuck in a precarious position, with strong support at $6.07 and significant resistance at $6.45. The stochastic indicator shows it's very oversold, while retail investors are exiting, placing it in the lower percentile of the Bollinger Bands. In summary, SoFi is caught in a market limbo, heavily influenced by broader economic trends and rate cut speculations. Until there's a clear catalyst, such as significant institutional investment or positive economic news, SoFi might remain in this uncertain state. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.